Hi, morning everyone. Welcome back to Morning Cup by Aiman here. Right, so looking at the S&P 500, well, it closed virtually unchanged, up by 0.02 percent, right, to close at 7520.37 points, taking a well-deserved breather and locking into the sideways after the massive run into the record high earlier of the week. Right, so I believe after driving the index to consecutive records, the AI as well as the semicon rarely hit the brakes, right? Also, tech like the Nvidia, Qualcomm, who saw a healthy profit taking, which kept the broader index from the changing higher, right? So not only that, recall the market participants are keeping a cautious eye on the Middle East development as well. Um, well, the recent U.S. military strikes on the southern Iran caused a brief flutter of anxiety. I think investors remains flat and also or on the sidelines as the higher level peace negotiation continue to hold ground. So I think the overall sentiment remains neutral to positive, right? Tracking on the recent trends at the moment, right? So looking at the China A50 futures, well, it edged slightly lower on Wednesday session, slightly by 0.23%, uh, right, showing that a technical consolidation as investors pause to digest the massive batch of fresh macro data, right? So, yeah, I think even though China's headline industrial profits reported a strong of 18.2% jump for the month of Jan to April, right? I think the market quickly look past the big number. Investors are focused on the fact that the gains are entirely driven by the high-tech export, while the soft domestic consumer demand is still hurting the local businesses, right? So not only that, I think the index was dragged down by the selling pressure on the its biggest consumption weights, right? However, I believe that the this is only a healthy pullback within the overall uptrend as the bullish momentum still remains intact. Well, at least for now. Right, so if you look at the WTI crude futures, well, it suffered another aggressive beating on Wednesday session, uh, diving 4.43% to settle at $89 per barrel as the peace dividend sell-off accelerated into the major technical breakdown. So this is after Trump sparked a brief intraday volatility when he stated he was not satisfied with the current negotiation and denied the state media rumors of an interim deal. So essentially, however, those buyers refused to step in on his hawkish words lah. So after the commodity breakout below our immediate support level, we changed the tone now to bearish and we'll continue to monitor further to see any major development, right? So looking into the Malaysia market, yeah, FKI, KLCI market, right? So the local market suffered a sharper pullback on Tuesday's session ahead of Wednesday's, Hari Raya High public holiday, right? So with the KLCI losing somewhere around 9.48 points, right? To crack just below the 1,007 psychological level at closing, right? So we saw a trading volume thin out, right, substantially as the local players aggressively squared out the position and locked in profit to avoid those carrying overnight risks into the market closure yesterday, right? So yeah, not only that, the domestic sentiment was deeply impacted by the heavy institutional selling as well. Into those consumer giants like BAT, right? BAT. Well, if you see BAT here, it plummeted around 18% to close at somewhere around 5.04 ringgit, right? On the underwhelming earning numbers, while the Nestle as well, and also the Heineken also face severe selling pressure. So I think yeah, further net selling, uh, net foreign selling as well is one of the factor. However, for those of you trading the FKLI, so let's monitor closely on the 1690 support level into the coming session, as we hope our positive trading bias still unchanged, right? So yeah, if you look at this heat map, right? So don't let this the rate index score to fool you, right? So the underlying market health is actually robust. I think the big money is still actively buying the dips in the blue chip tech stocks, like we have here Inari, and stabilizing metal heavyweights like this back cam, right? So I think this tells us that the pullback is temporary, technical breather, um, just a technical breather rather than a structural, downturn as a whole, right? So yeah. Looking at our Malaysia trading stocks for today, we have here Kijaya Prospect. Right, so the stock is on its breakout formation higher at 2 ringgit and 20 cent level, together with strong volume. So with that, we expect to see that the stock or the momentum, the bullish momentum, to keep stronger, and the stock able to test the 2 ringgit and 30 cent level, followed by 2 ringgit and 40 cent level. So if the stock to clear below this 2 ringgit and 10 cent support, this could reverse the course and trend lower. And also next we have Kawan Energy or Kinegy, right? So the stock is experiencing a pending breakout at 57 cent level. So yeah, if the stock to remain bullish, we expect the price to reach this 61 cent level, and together with a 64 cent level in the coming session, uh, with a high volume trading. So do keep an eye at the 54 cent level for any attempt of reversal. So today we have one breakout stocks, which is Kejaya Prospect Group, and also one pending breakout stocks, which is Kawan Kawan Energy, right? And lastly, for the FCPO, well, it's higher by 0.51%, uh, to close at 4496, right? For the August benchmark contract, heading into Wednesday, yesterday's closure, right? Striking off the earlier week sluggishness. So yeah, I think if you recall, fresh data from the Market Pump Oil Association, right, revealed that the local production in May, at least for the first half of May, fell by 5.9% compared to the same period of last month, right? So this a little bit tighter than expected supply outlook quickly triggered the short covering as well, and also over the neighboring countries, our neighbor Indonesia. The Indonesian Palm Oil Association dropped a major bullish headline, reporting that their March CPO export plunged by a massive 75% month on month, right? So, well, I think any supply tightness from the world largest producer will give Malaysia prices an instant lift, at least, right? So, but we still see that the upside remains limited for now. But I believe at this juncture we need to monitor the price action into the coming session, lah, right? So recently the price just rebounded from the 4,390 level, and our second support is at 4,300 support. Well, we still keep our stop loss remains firm at 4,700 level. Right, so I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Okay, thanks, Aiman. Hi, morning everyone. So for today, we have a note on Hong Leong Bank. This is their third quarter results. The third quarter earnings they reported 1 billion ringgit. It was up 9% year-on-year, but down 12% Q-on-Q. This brought the 9-month earnings to 3.3 billion ringgit, or up about 3% year-on-year, at 73 to 74% of our and consensus forecast. So, generally in line. The annualized ROE 11%. This was actually trailing behind the 11.5% to 12% target that management has. But if you look through the other key financial metrics, they were basically all, within or meeting the targets that management has set. Now, during this quarter, as mentioned, net profit was down. This was mainly due to non-interest income softness, where you have a combination of seasonality, as well as Hong Leong also saw some risk-off sentiment due to the Middle East conflict impacting the wealth income. Apart from that, loans growth 8% year-on-year, still quite healthy. There was a 1 basis point margin improvement on a sequential basis. While, asset quality, there was a bit of an uptick, 3% Q-on-Q higher, although management thinks this was really seasonality. The loan loss coverage was at 81%. Now, some of the briefing highlights, generally there was no change to the FY26 guidance. One of the things which Hong Leong said was, the April month or post the March closing, they have seen improved momentum on the non-interest income side. They see room for margins to expand as well. So with the improving operating income momentum, it does suggest that the final quarter for them should be a better quarter. Just to highlight also that on asset quality, they said it was pretty much business as usual for them. But the past 2 weeks or so, they have started to see a bit more of their SME customers starting to emerge with signs of stress. The take-up for their assistance package has so far been, quite very low. But for now, Hong Leong thinks that their guidance on credit costs, which is 10 basis points, as well as their gross impaired loan guidance of below 0.65%, they should be able to, sustain such guidance for the next 6 to 9 months. Other than that, there's a plus 60 bps impact to capital from the new guidelines coming in. Although, they have in the past said that part of it would be kept for growth. So we have actually trimmed our earnings estimates by 2 to 3%. This is on the back of the weaker non-II that we saw during the quarter. Target price comes down to 24 ringgit 70 cent from 25 ringgit 70 cent. But we are still maintaining our buy call on the stock. I think, asset quality is still going to be pretty much holding up very well. And so this is still one of the defensive banking picks for us. Okay, that's it from me. I'll pass you to the next speaker, Kok Wen.
Okay, thanks, David. Yeah, let's move on to Sunway. Sunway first quarter 26 results met our expectations. Of course, if you read some of the newspapers, there is this 9.1 billion remeasurement gain arising from the listing of Sunway Healthcare. And so if we exclude this item, core earnings were mainly supported by contributions from Sunway MCL as well as the construction division. Revenue and earnings for the property development, apart from MCL, there was also this sale of an education asset located in Sunway Square, and they sold it to Sunway Education Group. So the disposal is worth 357 million, and the net gain is 23.1 million. As for the property investment division, it was affected by seasonal factors and also the slower tourism activities amid the ongoing Middle East conflict. The segment was also hit by startup operational losses of 13.4 million due to the opening of Sunway Square Mall and also the office towers. Healthcare numbers were consolidated post listing on 18 March. So proud to that it was at the share of associate JV level. So despite the higher revenue for the healthcare segment, PBT fell quarter on quarter due to seasonally lower medical activities in conjunction with the festive season in first Q. and also higher depreciation and interest charges from the newly opened hospitals. Property sales for first quarter stood at 1.4 billion, quite strong, but it's mainly driven by projects in Singapore, which contributed almost 1 billion, and this is followed by Cochrane, 119 million, and Serene 2, which is at Kelana Jaya, 96 million. Velocity 3 is 83 million. So Binary Resi is in Tampines, Singapore. It was launched in March, and the latest take-up rate has already hit 93%. So sales in the coming quarters will likely be even stronger because of this, and management will likely ramp up launches in the coming months as well, especially for those landed and high-rise projects in Johor, in Iskandar, Malaysia, as well as the RTS Tower 3 in Johor Bahru, which will be probably later part of the second half. So all this should make this 4.2 billion sales target achievable by year end. We maintain our FY 26-28 earnings forecast. Unbilled sales and current outstanding construction order book stood at 9 billion and also 8.16 billion. All in, we maintain our buy rating. With the failed merger attempt, we do not rule out the possibility that Sunway may embark on more aggressive land banking activities ahead. Net gearing post Sunmet listing is 0.3 times, down from 0.48 times. We are maintaining our target price at 6 ringgit 11 cents. That's all from me. Let me pass to the next speaker, Ming Hong. Sorry, I think there's some technical issue here with my colleague. So that's all from us today at our Ashmi Morning Kappa. So I hope to see you all again tomorrow morning at the same time, 8 o'clock. Thank you and happy trading.